Like and subscribe and click the bell icon to get new video updates.
Warren Buffett tells shareholders about spending $51 billion. Warren Buffett gave Berkshire Hathaway investors a few details about how he spent more than $50 billion earlier this year and again reassured them that the company he built will endure long after the 91-year-old billionaire is gone. Tens of thousands of investors packed an Omaha arena to listen to Buffett and Berkshire's Vice Chairman answer questions at Berkshire's annual meeting that was back in person for the first time since the pandemic began, but the turnout was likely smaller than when it used to regularly attract more than 40,000. Berkshire revealed in its earnings report Saturday morning that its mountain of cash shrank to $106 billion in the first quarter from $147 billion at the beginning of the year as Buffett invested $51 billion in stocks and repurchased $3.2 billion of its own shares. Buffett told shareholders that right after he told them in his annual letter on February 26 that he was having trouble finding anything to buy at attractive prices. Berkshire spent more than $40 billion on stocks over the next 3 weeks. Buffett didn't reveal everything he bought but did mention several highlights, including boosting Berkshire's stake in oil giant Chevron to $26 billion, up from $4.5 billion at the beginning of the year to make it one of the conglomerate's 4 biggest investments. Berkshire also spent billions buying up 14% of Occidental Petroleum's shares in the first half of March, and added to its already massive investment in Apple stock. Edward Jones analyst Jim Shanahan said that with the Chevron and Occidental investments combined, Berkshire now has more than $40 billion invested in the oil sector. Even before Saturday, it was clear Buffett was on the hunt because he agreed to buy the Alleghany insurance conglomerate for $11.6 billion and made another multi-billion-dollar investment in HP Incorporated. Buffett said Saturday that he also bought 3 German stocks but didn't name them. Buffett said Berkshire was able to take advantage of the fact that Wall Street is largely run like a gambling parlour with many people speculating wildly on stocks. Occasionally, Berkshire gets a chance to do something, and it's not because we're smart. It's because we're sane. Buffett said. Buffett revealed Saturday that he has made a big bet on Microsoft's planned acquisition of Activision Blizzard. He said a couple months after one of Berkshire's other investment managers bought roughly 15 million Activision shares, he increased that stake to roughly 9.5% of the company, or about 74 million shares, after Microsoft announced the deal in January because Activision stock was selling for less than the $95 per share deal price. Both Buffett and his investing partner, Charlie Munger, reiterated their past criticisms of cryptocurrencies like Bitcoin because they don't produce anything. Munger said cryptocurrencies are stupid because they're likely to go to zero, and evil because they undermine the Federal Reserve. Plus he said they make American leaders seem foolish for not banning them like China did. Even though Berkshire is led by Buffett and the 98-year-old Munger, investors didn't ask much about succession planning, perhaps because Buffett said a year ago that Vice Chairman Greg Abel, who oversees all of the company's non-insurance businesses now, will eventually replace him as CEO. Berkshire also has 2 other investment managers who will take over the company's portfolio. Buffett said he thinks Berkshire's decentralised culture that relies heavily on trusting people to do the right thing and avoiding huge risks will help the company thrive well into the future, and many of the companies it owns like BNSF Railroad and its major utilities will remain stalwarts of the economy. Berkshire is built to forever. There is no finish point, Buffett said. The new management, and the management after them and after them, are just custodians of a culture that is embedded. Investor Harris Kupperman, who leads the Praetorian Capital hedge fund, said he is not especially worried about the Berkshire's future because the eclectic conglomerate has a solid foundation. He built it as well as he could build it. Nobody is ever going to be him. That's obvious, Kupperman said. He said perhaps Buffett's eventual successor will be able to reevaluate some long-term Berkshire investments that Buffett has held for decades and decide whether it still makes sense to hang on to things like the company's huge Coca-Cola stake. But Buffett's and Munger's ages are always in the back of Berkshire investors' minds because there may not be too many more meetings with both of them. Munger sat in a wheelchair during Saturday's meeting. "Actuarially, I don't know how much longer they'll be able to do this," said Jose Ueligiborrieta, 43, of Miami, who was